You are standing on the floor of the House of Commons. It is May 7, 1999. The British Chancellor, Gordon Brown, makes an announcement that shocks the financial world. He declares that the United Kingdom will sell more than half of its gold reserves. His reasoning? Gold is a Barbarous relic. It creates no yield. It is dead money. The smart move, they told us, was fiat currency. Digital debt. Paper promises. Now, cut to October 2025. The tone has shifted. The same institutions that mocked gold are now engaged in what the World Gold Council calls colossal buying. In just the first 3 quarters of 2024, central banks added 712 tons of gold to their vaults. This wasn't a slow accumulation. It was a panic. Singapore aggressively ramped up accumulation, with reserves hitting 222 tons, a massive 45% increase since the end of 2022. Turkey now holds 572 tons, a staggering 34% of its total reserves. They told you gold was worthless while they quietly built the biggest hoard in history. Why? Because they know something you don't. History proves that when the architects of the financial system buy insurance, the house is already on fire. For the last 20 years, the narrative was absolute. The modern financial system had evolved beyond physical assets. We were told that the US dollar was the ultimate store of value. But the data reveals a massive contradiction between what central bankers say and what they do. The World Gold Council reports that the appetite for gold reached a significant milestone in 2024. This follows the colossal buying seen in 2022 and 2023. Note the word choice. Colossal. Let's look at the mechanism of the law. In 2023, the average gold price hit a record $1 dollar, 940.54 per ounce. That is 8% higher than 2022. Logic dictates that you buy low and sell high. But central banks accelerated purchasing in 2024 despite these record valuations. They are ignoring buy low. Why? Because you only buy an asset at an all-time high if you believe the alternative, the currency you print, is about to collapse in value. The ECB report even admits gold has surpassed the euro as the world's second reserve asset. This is an admission of failure. They thought they were different. They thought they could print value into existence forever. They were wrong. Let's examine the crime scene, country by country. We start with the People's Bank of China. Officially, they hold 2,068 tons of gold. That sounds like a lot, but here is the contrarian angle. This massive hoard represents only 4% of their total reported reserves. Compare that to Turkey at 34%. This implies the Chinese shift out of fiat has barely begun. If China moves to match international averages, the buy pressure will shatter the price ceiling. Then look at the Reserve Bank of India. By the end of 2024, RBI gold reserves totaled 876 tons, or 11% of total reserves. These are emerging markets explicitly rejecting the Western financial hegemony. But it's not just the East. The 2025 Central Bank Gold Reserve Survey shows that 59% of central banks expect to increase their gold reserves this year, up from 41% in 2024. Conversely, 73% of respondents see moderate or significantly lower US dollar holdings. That is not a trend. That is an exodus. They are voting with their wallets against the very system they manage. Goldman Sachs predicts prices tearing through $4,000 per ounce in October 2025, up around 50% year to date. This isn't speculation. It's a mathematical reaction to currency debasement. As one analyst put it in, gold as international reserves, a barbarous relic no more? Quote, "We are seeing active diversifiers raising shares by 5 percentage points or more. The era of the dollar is ending, and the era of hard assets has returned." Why gold? Why not Bitcoin, or bonds, or another currency? The answer lies in a specific quote from a 2025 Yahoo Finance report. "It is not anyone's liability, it carries no counterparty risk, and it cannot be frozen by a foreign government." That last part is the key. After the sanctions on Russia in 2022, every central bank governor realized their foreign currency reserves could be seized with a keystroke. This realization killed the trust in the treasury market. The store of value for the official sector has grown since 2000, specifically because gold carries no political risk. We are seeing repatriation. Countries from Poland to Hungary demanded their physical gold be shipped home from London and New York. They don't even trust the Bank of England to hold it anymore. Michelle McCory stated it clearly. Quote, "The most important signal in global finance right now is coming from central banks. Their gold buying is hitting historic highs. But here is the forensic detail you missed. Nearly 70% of central bank purchases go unreported initially. They are buying in the shadows. Why hide it? Because if they announced their true intentions, the price would skyrocket before they finished accumulating. They are front-running the public. They thought they were different, believing they could manage a soft landing while secretly wearing a parachute. We are now in the late stages of a classic debt cycle. A YouTube analysis titled, "End of the Road: How Money Became Worthless," perfectly captures the dynamic. When the Fed becomes the only buyer, that's the endgame or the beginning of the hyperinflation. We are watching the transition from return on capital to return of capital. The numbers confirm this defensive crouch. In 2025, 44% of respondents actively managed their gold reserves, up from 37% in 2024. While enhancing returns is a factor, the primary driver is safety. 64% now view gold as the leading reserve asset. This is a complete repudiation of the last 50 years of economic theory. Even Warren Buffett, the ultimate believer in American business, is being questioned. Recent headlines ask, Warren Buffett's blind spot. Did the digital economy leave him behind? But look at what the central banks are doing, not what the tech bros are saying. Central banks engaged in colossal buying of physical assets in 2022-2023, rather than relying on digital yields. The smart money is moving backward in time to the only asset that has survived every empire collapse in history. The irony is palpable. The official sector demand estimate for 2024 was 47%. Nearly half of all gold bought is going into government vaults. They are cornering the market on the exit strategy. They thought they were different. They thought they could suspend the laws of economics. Now, they are panic buying the evidence of their failure. The pattern is undeniable. From Singapore's 45% reserve increase to China's silent accumulation, the data screams one thing. The architects of the fiat system are exiting the building. They called it a barbarous relic to keep you away from it, while they filled their vaults at record prices. They lied. They prepared. And now, you have the evidence. The only question left is, are you going to watch the collapse? Or are you going to prepare for it? Class dismissed.